Perspective is everything. I'm Mike. This is Mondays with Mike. It's June 20th, 2022. And I just want to put that date out there because I want everyone to remember, if they're watching this in the future, that I made this video while all the other news stories were about how the sky was falling and how the real estate market is terrible and the economy is terrible and there's a lot of chaos out there. I mean, we are in a period of change and shift, and there's some tumult. But I want to just give perspective here. And I'm mostly directing this at people that are thinking about buying. Sellers, it's a little more specific to their property. But maybe we'll do a follow up in this series about that because I think we're going to be dealing with these factors for a while. So, what am I giving you perspective on? One, I do think that rates will continue to go up in July. I think it's important to keep in mind that the Fed does not exactly control interest rates and especially not mortgage rates. They're tied to the 10-year Treasury bond, which is certainly affected by Fed decisions. But, markets are pretty efficient. I'm not going to get into a philosophical debate about how efficient they are. But if you're looking at what Wall Street and what traders and investors are looking at in the interest rate markets, they're already betting on which way the Fed is going to go in July. And it's a very strong probability, according to the smart money, that we're going to see another 0.75 increase by the Fed in July when they meet. So I think that whether or not that happens, we will see the market anticipating that and, leaving aside global events that can intervene and can alter the rate. It's not just the Fed and the Fed's decision. I do think that up until that meeting, we're going to see rates go up. In fact, when the Fed last week kept their guidance or kept to the expectations of the market with that 0.75, there actually was a very small decrease that day in mortgage rates. They went back up the day after, but that was because there was no surprise. People were actually relieved that they didn't go up a full point. So keep that in mind. You can anticipate where it's going. And inflation has also been going up. If you're looking at economic data or if you know about economic data, one of the things is that they don't have all the information all the time, and they're always revising, the inflation numbers and the unemployment numbers. So the last couple of months, what we've seen is the trend is inflation actually has been higher than what they were projecting. So I think we're actually dealing with higher inflation than we even know. But look, we're still doing okay, even with those levels. And as long as inflation is going up, rates naturally will go up. Banks are not going to lend for less money than the inflation rate, and they always have to build in some cushion. So that's just going to be the theme for now. And it's not a theme that we haven't seen. This happens all the time on a long enough time frame. So everybody can adjust, and it's not like the market is going to stop. If you're thinking about, or if you're concerned, I should say, about buying a house now, and is it the top? And am I going to lose value? Is the market going to crash right after I bought and I'm buying at these very high interest rates? Well, inventory is still very low. So I think we are going to have a period where it's going to take sellers a while to adjust and realtors a while to adjust, quite frankly, to where the price level should be. But if you're in New York, if you're watching this in another part of the country, I can't speak to your market, but in New York and Long Island in particular, the properties don't typically crash. Even if you go back to 08 and 09, we didn't see the crash that we saw in Arizona or Florida or Las Vegas. They don't build as much here. They can't. It's an island. It's a populated area. So there's a natural check on inventory, and there's a natural check on prices. It's kind of like a natural floor to the prices. And if you're looking to live someplace, not a short-term investment, but someplace you want to live with your family, over time, housing prices, just look at the numbers. You don't have to trust me. Just look at the trends. You'll probably be okay in the future if you need to sell. More importantly, before you're thinking about selling, you'll probably refinance. And that's the other thing to keep in mind. What rates are going up, they can come down. They can come down pretty rapidly. And one of the things I heard from our EXP group, when everyone was talking about this morning, was you marry the house, you date the rate. The other way to think of this is you want to win the war even if you lose the battle. So what does that mean? Let's stick with the first analogy. When you buy a house, it's a longer term commitment typically, and it's it should be a good, solid commitment. But rates, I mean, they change all the time. And if you see a better rate down the line and there's a cost savings, you can refinance and not get rid of the house in the future. Uh, and maybe this will be the last bit of perspective, and it all kind of ties together. Keep in mind too that rents will go up in an inflationary environment. We saw New York City now has, I think it's a record. Don't quote me on that, but the average rent in New York City right now in Manhattan is $5,000. That's the average. So that's pretty high. If that's not the record, that's getting up there. So New York City has bounced back. Rents are going up. Housing prices typically do go up with inflation also. So that's a counterweight to rising rates. If people are concerned about buying at the top, like I was talking about before, when you're making those rent payments, if you're a renter, you can pretty safely bet that whenever your lease resets, if it's year to year, your rent is going to go up. Your mortgage payment will not go up. We'll talk about ARMs in a second. I lied. I have one more bit of perspective. But you're building equity and you're increasing how much of a stake you have in your house with each payment you make. So your equity increases, and the balance of your loan to pay off decreases with every payment you make. With rent, I've heard people say every rent payment is like a full interest-only payment, and there's no equity. Another very good analogy. We've talked about the tax benefits on the show many times, but again, perspective. Rates may be going up, but you're putting money toward an investment in where you live. So really the last bit of insight that I have, keep in mind too, 2021 was an anomaly. We saw some crazy market forces. We had low inventory, we had low rates, and we saw houses flying off the shelf. Well, we can cut out like 3/4 of those buyers, and as long as the pricing is normal, we're still going to have a pretty normal and robust market. It doesn't have to I wasn't expecting 2021 to continue for really much longer than it did. It's just a question of what's going to happen next. And a lot of the products that were very popular in the run-up, like 2018, 2019, I can think back to even 2015, a lot of the loan products that were very popular with buyers, because it didn't require a high down payment, I think will come back into vogue. I mean, you have to always look at what your monthly payment looks like, but an FHA loan where you don't have to put 20 or 25% down to compete with other buyers, that's something that may be viable. Adjustable rate mortgages, those are not what they used to be in like 2008, 2009. They got a really bad name. If you plan it out with your mortgage loan advisor, and it looks like it's a pretty safe bet that you're going to refi before it resets, and even if the rate is up a little bit, if you have a collar on that and it can't go up on you too much, it could make financial sense, and it could ease the pain of higher payments now. All right, this went almost 10 minutes. Can't believe it. I expected to just give a couple of bullet points. That's okay. I'm happy to talk through more of these things. If you're seeing this on social media, send me a direct message. If this is in an email, you're probably already somebody we're speaking to. You can email me. You probably know how to call me. Always happy to talk about it. It's going to be the continued theme, I think, as we go into the second half. But I hope everybody is having a good summer, and we'll be talking to you soon. Take care.